Welcome back, everyone, to Block Cash Show. Today we have an amazing guest, the co-founder and CEO of Laser Digital. It was a pleasure to welcome Jez Mohideen. We discussed what does it mean to be a leading organization in the UAE, in the region. How do you provide services to institutional and qualified investor? What do people want to invest and trade when they access the crypto ecosystem? What does it mean to build an organization and a leading institution backed by one of the key investment banks in the world? I know you're going to enjoy this episode. My name is Anton Golub. I'm here today with my co-host, Dr. Demetrios Zamboglou. Enjoy this amazing episode. This was a masterclass in trading and investments. Have a blast and enjoy the show.
I think tokenization is such a critical component of digital assets, I think without which we can't go any further. The reason I say tokenization brings composability to crypto ecosystem, because what sometimes crypto lacks is good collaterals. For instance, if you want to trade in exchange today, okay, you can put Bitcoin, but they're all kind of convexity the same, right? The market goes down in there. So if you can put treasury as a treasury, tokenized treasury or tokenized equity as a collateral, we found where there is a huge demand to tokenize, both on the supply side as well as the demand side, is funds, as you said, right? Because of the complexity of redemption, lack of transparency, then so many. We worked out one stage when we ran through the entire tokenization, but if you were trying to do a fund tokenization, there's some like 30 steps there. Credible market, because crypto has a lot of market makers, but some market makers who come from traditional field, not necessarily they will do better, but they'll be a lot more transparent in their own conduct, how they're going to do things, right? It gives a bit more trust and transparency to it. And then we felt that if you're doing that, like traditional markets, you need to have a financing desk, right? Finance your own position, looking at it. So that was our broker-dealer side. We said it's very similar to what exists in capital market business, right? Derivative is a key component. We are not there yet. We are starting to see some larger, bigger firms getting involved. That is starting to happen, but I would say we are still very early stage of that, because later stage you will start see structured notes, many things, because the Bitcoin volatility means you can convert into a very attractive product as opposed to fixed income or equity, right? We felt Abu Dhabi is a good place to be doing that as well, and then we went and approached the regulator, very again forthcoming regulator. They understood exactly what we want to do. They were well versed in the topic. I mean, when we approached them in probably 23, they already had 5 years of learning.
Jez, welcome to the show.
Thank you. Thanks for inviting.
It's really great to have you. And we were just talking about it, in the preparation. So great to have somebody who has been on the investment banking side, hedge fund world, also running its own startup. So I think we're going to have a great discussion and, a blast. And I think Demetrios, this will, and also I think we can have a great trading discussion as well, markets discussion. Yeah.
Absolutely.
So let's maybe begin. Maybe you can tell us a little bit about yourself, how you ended up here in Dubai.
Sure. I started my career in investment banking in the mid-90s, primarily focusing on quantitative trading. Yeah. That was my focus, and then the specialization on fixed income. Mm-hmm. I traded almost 25 years, starting from investment banks, and my kind of, I would say, then I spent actually both in London and a number of years in Japan. Yeah. Where obviously we went through a massive deflation spiral, and then of course zero rates. I saw it well before the GFC, all the zero rate, negative rates. So I was there for a decade in Japan with an investment bank, and then came to London, back again London in the around 2000, just when the Lehman crisis happened. Came back. Obviously, the rest of the world was going through the same Japanese dose of going to deflation spiral, negative rates, and all that, which we never thought will ever happen. Yeah. And then I came back to run inflation trading as well as a primary focus on fixed income in European. Although I spent a number of years on JGB. And then I remember a moment, very critical moment in 2012. I still remember, for most of us will remember, I'm sure. Obviously, you will definitely remember, because when we went to the European crisis, and 2012, I remember July 26, 2012, because obviously I was heavily trading, had positions, when the magic moment when Draghi said whatever it takes. It was a big moment in the sense that not just for trading firms, but also Europe's project, right? Because you saw Europe was in the brink of actually collapse because of debt spiral. You saw Greek bonds were trading at 10 cents to the dollar, and it was starting to rattle France, and so that moment basically, I remember one of my brokers was saying that's the time I think he picked up, first iteration of Bitcoin. It came into my life. One of the brokers said it was the first spike you saw, not at $10, $20 term when it went to $1,500. I think even $1,500 or something. So one of the brokers saying, have you seen this asset? And kind of it was a limelight moment for me because I've spent all my years in fixed income where you're always trading relative value around the monetary policy and all that. So that was the time really I started digging into it. I mean, still I was not converted at that point. This guy said you should be buying, I didn't buy it at that time, but obviously.
I think if you bought that time, you wouldn't be
here. We would not be here talking.
Agree. Yeah, very good. I still go through some of my past emails where I was having debate with my own brother as well. He was based out of Silicon Valley. He said you should buy. A lot of the techies understood that. Right?
Yes,
people came from tech background, but financial background people, we always risk averse, right? We always trade with a bound, some kind of a unknown asset class, you don't even know the monetary value. And then I run up to this as well. So you debate a lot. But that moment told them the power some of these central bankers have, as well as the governments have through the GFC as well. They can print at any time at will, right? So that kind of showed both the weakness and the strength, right? So that was my pivotal moment. And then I came out of the investment bank in 2013. I joined, then I was debating what should I do, took some time off, and then went into a large macro fund, hedge fund. Then actually became a lot clearer during my period there. I was there for 5-6 years, and that's when I started really dabbling into digital asset, because the founder himself, he was very, very vested in looking at all different opportunities, and then he started looking into this asset class. I was very keen on looking at it. We both came from very similar engineering technical background, and I was getting bored with that, fixed income as well, because for years I've traded, rates were zero. We were still on a low rate, and I've seen it all in Japan, repeating back again in the Western world. For me, it was not exciting. So I was looking for an opportunity to get into another asset class. So that's when, of course, digital asset became very interesting for me. I got really involved in 2015 while I was in the hedge fund. And then 2018, the opportunity came for me to join Nomura as the chief digital officer for the group, mostly using like quantitative and AI-driven techniques to run market making and systematic trading. And then I was also running the European part of the European trading business. When I first came in, then one of my first projects I said is we should look at digital assets. Obviously coming into a bank, and obviously everybody thought I was mad, right? What are you talking about? Especially a conservative Japanese firm, looking at, I said first we should look at custody, because I felt I couldn't go with any other thesis, right? If you don't understand the custody, if you want to safeguard the assets, there's nothing you can do. So at that stage, fortunately, one of the main sponsors who I was working for, I used to work for him in the past. He was one of the key supporters. He said, we should look at a project like this, and let's incubate it with known partners. So what does Nomura bring? Nomura brings governance, risk management, and all the trust and transparency, while the other two players, we did a JV. One was a big user of it. They required, asset manager required basically custody, because he was just saving in USB, and he was having sleepless nights, sometimes hotel rooms, he's traveling, suddenly he gets taps on the door at past midnight, he's worrying about, So he had that issue, and then the other partner was a big cryptographic security company, so we three-way came together, we set up a custodian. So that was my first really institutional foray into digital assets. That was also the first time that Nomura also got comfortable with the project. So that was, I would say, the beginning really into the digital asset ecosystem. And that kind of led 3 years later, 2022, to set up Laser.
Yes. Jez, I definitely want to ask you more about Laser, but also you have a very international background, right?
Yeah.
So you've been in many different countries, and now the choice actually where you reside is here in the UAE.
Yeah.
So what was the kind of the key decision making? Why UAE, and how do you compare UAE business culture, talent, living here compared to, for instance, the Japan, to London, and so on?
Yeah, I think it's a very good question. So 2018, I moved here.
Yeah.
I moved here for personal reasons, and I wanted to be out of London, and I needed a break, and also I already had a very good childhood memory out of here. My father was here in the 80s.
Wow.
So I used to come in and out of the UAE. So I've already had a soft spot for UAE. Yeah. And then when the opportunity came, when Nomura offered me, you can be in one of their centers, I picked UAE. Primarily, I felt that it was an easier place to operate from. I could build, and also I was running a global team. So in terms of time zone, I found it very, because I had a team in Japan, I had a team in the US, I had a team in London. I'm based here, and also a few members in Singapore. Yeah. So it was very easy to run from here. Yeah. I found time zone wise, especially if you're running a large team. And then also, just day to day, I found it easier. Not necessarily, hiring talent at that point, but work was easier and kind of allowed me to operate. But then, of course, for my own kind of, I would say, coincidentally, it worked out that then 2020, 21, COVID showed the real resilience of a place like this, right? Everybody shut down. I was operating here. We only shut down for 4 or 5 weeks. And I could run the global, obviously everybody's working from home, but here we were going to the offices and everything was normal, right? Yeah. That actually, so 2 years into it, kind of my payday came that everyone is suffering the rest of the world, right? Particularly in London and everywhere. So here everything was normal. And then that was also the beginning of the US agenda on the digital asset. When everybody shut down, US issues, you had issues out of obviously Asia, Hong Kong crisis, a lot of people started moving here. So yeah, all of a sudden it turned out this was the best place to be.
Yes.
And then today we find it, to your point, if I was to compare with Japan and the UK and elsewhere, I find here, we are surrounded by 3 billion population, right? So you have large regional talent pool available, and also easy. I found it very easy to attract talent. So our go-to card, obviously we're an institution, right? Not easy to attract crypto native.
I think you have
talent.
one of the best brands in the region.
I think you have no problem.
I think you have no problem attracting talent in this region.
So we agree. So, and also when I told the talent as well, we can give you the opportunity to be in Dubai, everybody said, done, we are coming. Particularly, I found it easier to attract younger talent who are more mobile. Yeah. And those are the type of talent we wanted more.
Yes, for sure.
Particularly the kind of nascent industry like that. Yeah. So I find it very easy to operate from here. And it also became I would say, inflection point. If you look at people who are having conferences east to west to south, everybody has to go through this melting pot. Yes. So also you end up meeting a lot of people you will not meet. Yeah. If you're in Japan or if you're in the US, right? Or even if you're in London. Yeah. Here, naturally, a lot of talent pool are coming. Of course, the other big issue is the government level support means everyone's coming, whether it's Abu Dhabi or it's Dubai, people are going through this place. So you end up bumping a lot of people, a lot of very powerful people, important people, a lot easily. You can connect up.
Awesome. Really great to hear. And just to continue on what Demetrios said, you have a really great reputation yourself personally, but also your organization.
Thank you.
And you kind of touched upon it, saying that you started early on, from Nomura's backing on the custody side, but today, Laser, you offer many different products and services. So can you explain a little bit more, what does Laser do, and maybe also who are your clients? And I know it personally, but how are you regulated here in the region as well, and kind of how does that look like?
So Laser was obviously set up in 2022. The focus is always institutional.
Yes.
We didn't want to go down the retail path. It was not a path. It was too difficult for us to start from a retail path, and we picked up institutional and qualified investors. Right. So that was our remit. We got from the board as well. When we started up, we originally anchored ourselves very much Swiss-centric because of this. It was a tier 1 regulator, easier for the board members to understand, the seniors to understand and all that.
Can you tell the audience, how do you pitch these things to the board?
Yes.
How the idea begins?
Yeah,
because it's a very difficult thing to go in a Japanese board and pitch them.
Yeah, very, very difficult. But what we did was, I think, because we started from the initial, our initial seed point was always the custody. We actually did it very, very systematically. The aim was also build not the biggest and the best custodian, is to build something bank-like type of custody.
Okay.
We build a kind of, I think the Comino, we built it, it's an institutional custody built for institutions. So it's basically, we went with the, similar, I would say, governance, risk, compliance, you exist in a bank, into a custodian. So obviously it's onerous. It's probably costlier. But we went down the path of let's set up. So the board got comfortable with the fact that we originally said 2000, we're going to incubate it, we're going slow steps, and then we're going to take it to external investors and raise. And they got very comfortable with the path we took, how we went about, right? Very structured and slow steps. We didn't go for big valuation. That was not the aim. Aim is to get it working. And they got comfortable, we did that. So 2022, obviously 21 was we were seeding the idea we should go into digital assets. This is, again, an asset class derived from whether it's equity or currency, it has similarities, it's a digital goal. And Japan had a past history as well, right? I mean, prior to Mt. Gox.
Exactly.
There was huge adoption there. It was one of the first regulators to regulate exchanges there. So there is a historic past, right? I remember when I originally presented in 2018, when you looked at the data, Japan had something like 60 or 70 of the world's flows prior to 2017. Of course, it's gone opposite now, right? Since obviously the regulation, then they put tax rules, became punitive and all. So that kind of gave them some comfort. There is a business. This is a business worth doing it. And also there were, as I said, some strong supporters internally, which we said, okay, we'll take small steps. Hence, 2021, when we presented, they took stalls. They said, okay, let's look at it. Now, one of the advantages is I came from very heavy trading background. My chairman also comes from a similar background. So we kind of underwrote saying that we are going to start from our strength rather than go down the path of building something we don't know. Now, the reason is custody helped for us to understand. If you don't understand storage, if you don't safeguard the assets, we can't go into it. Yep. So we solved that 3 years before that, right? And then we use that as a benchmark to kind of build the next layer, saying that now we want to build a trading firm, focusing on what the market needs in terms of institutional, when the institutional adoption comes. Now, it's still coming. It's not there yet totally. Yeah. But when it comes, what do they require? They require trading, deep liquidity, exactly the points you discussed, derivatives, because they need to optionalize their position. They want to hedge their portfolios. They don't want to kind of, when it's a volatile asset class, then they require market makers potentially, right? Credible market. Crypto has a lot of market makers, but some market makers who come from traditional field, not necessarily they will do better, but they'll be a lot more transparent in their own conduct, how they're going to do things, right? Yes. It gives a bit more trust and transparency to it. And then we felt that if you're doing that, like traditional markets, you need to have a financing desk, right? Finance your own position, looking at it. So that was our broker-dealer side. We said it's very similar to what exists in capital markets business, right? So we didn't try to do anything different. If Bitcoin and crypto as a whole is to evolve, you require these components. And then the other side, we said, okay, let's also set up an asset manager to see whether we can build products, institutional credible, institutional may invest. But it's a long-term journey. But I don't think asset management you can build in 2-3 years, right? So you got to take a 10-year view there. Obviously multi-cycles to build long-term project. So these are the two kind of, I would say, major verticals. We have broker-dealer, asset manager. If you look at it, you're trying to build something like Citadel, securities and asset manager, hedge fund side. So that was our original thesis. Now, of course, we've gone down the path, we've learned, we've made a few mistakes, we are iterating, we are improving. Many steps have happened since then. But we are an entity, pretty much we give deep liquidity to institutions and qualified investors, and then obviously hedging their portfolios, financing their portfolios, helping on that front as well. And then as institutions start picking up doing structured products like structured derivatives, we want to be there as well doing that. So we're building that desk. And on our asset management side, we've kind of incubated a few projects. We tested the market, whether it's carry, whether it's I would say beta products. And then we also look to launch some sort of a hedge fund product as well, born out of digital assets.
You have quite a big spectrum of products, yeah? And can you tell us a little bit more kind of what do you see locally and globally? Where is the most appetite from the institutional investor? Is it more just saying, okay, we want Bitcoin, or is it more altcoins? Do they want more sophisticated exposure? Like, how does the dynamic look like? And the reason why I ask you this is because if you go to the traditional markets, the most volume, the most activity is always on the derivative side. It's like it's futures, options. Are we there yet in crypto, or is it still mostly spot traditional?
Yeah, I mean, I'm sure Matteo also will have view, but I think we are still very spot and perp centric. Because the market is still, I mean, I don't know exact numbers. If I was to guess, crypto is probably 90% still retail and 10% institution. Maybe that number may change with the ETF coming along and, you know, more. Still, it's very retail oriented, right? So the derivatives they're using primarily is perps. So which is a lot of leverage trading as opposed to kind of the optionalizing position. But for sure, with the ETF launch, ETF options, you're starting to see the option market, and also you're seeing large investment banks getting into it as well because they're seeing. So for sure, we are gearing up our derivative desk, and it is a big part of our core part of our business because as institutions pick up, to your exact point, derivative market is what's going to explode. Very similar to equity you saw, very similar to fixed income, no different. You need to have a depth in the derivative market. That's the only way you can build the institutional product. And also you bring credibility to the ecosystem, right? People can hedge very quickly, not worrying about different exchange risk or different products which are not fungible and all that. So derivative is a key component. We are not there yet. We are starting to see some larger, bigger firms getting involved. That is starting to happen, but I would say we are still very early stage of that. Okay. Because later stage you will start see structured notes, many things, because the Bitcoin volatility means you can convert into a very attractive product as opposed to, you know, fixed income or equity, right? Yes. So I would see that, but today is heavily, I would say, spot and perp centric. Then institutional wise, I would say the other leading product is financing. There's a lot of demand for financing, particularly, and also to your point, heavily Bitcoin centric because that's the largest asset class. I mean, 2/3 of the market cap is Bitcoin, and then some of the other majors. I mean, the way we set up is, of course, we will be heavily Bitcoin centric as an institution, but we have the ability to trade many of the altcoins because the reality is we need to navigate the market with the opportunity set, right?
Yes. Okay, got it. Maybe I'll ask then one more question is that you have been a pioneer here in the country and the region. And one thing that's very impressive is you were on this journey together in the country of when the regulators starting, were actually created, but also when they were launching the frameworks, right? And a very unique feature of Laser is actually that you have also, let's say, presence both in Dubai, but in Abu Dhabi. So can you tell us a little bit, how was that experience? How is it to get the license here from both regulators?
I think we started our journey with the regulator here in 22. As soon as we decided, when we had the Swiss operation headquarters set, I was based here anyway. So for me, it was a vested interest to make it work here. Fortunately, post obviously COVID, the vision of the local leaders here as well, both in Dubai as well, they made a very, very, a constructive decision to make it a hub for digital assets. They made that decision. They took all the help from consultants, everyone to build that regulator, which is very unique. But also we also understand the uniqueness means somebody has to kind of be a leader, and we will be a kind of a poster child. And fortunately the regulator also thought we will be a good counterparty because obviously because of our heritage, conservative heritage means is probably a safer counterparty to work with. And they already had a lot of knowledge. I mean, they had other counterparties as well they were working with. So we've been working very closely with both in Dubai because we felt the regulator will understand what we are trying to do. And we are speaking the asset class. I didn't want to go to a regulator first, start with the traditional assets and say, okay, we are trying to do that and we want to extend it to in digital assets. It was engaging with the regulator purely, the objective is to make this ecosystem work. It's a lot easier to go with all the optionalities I wanted in the asset class. What do we want to do? We want to trade OTC. We want to do potentially treasury services. We want to do asset management, but all digital asset focus. So it was easy engaging with the regulator. Yeah, license took a while. It was not a easy license like many thought initially. It took a while, many consultations. They had to redraft, and they got to a point. And we were there from the inception. So obviously that has helped as well to kind of both learn from their experiences. Then you had events like FTX, and so you learn and you iterate and you get better. Yeah. But with that also we found out also Abu Dhabi is a key center, because obviously in the sense that we also had the kind of our ambition is also not just to do digital assets. We are a big believer on, when we say digital assets, is also traditional assets getting tokenized. I mean, that's the whole thesis why even group like Nomura
RWAs, yeah.
RWAs. As well as, of course, traditional assets. So we want to bring products like, let's say, Bitcoin plus fixed income, Bitcoin plus gold, Bitcoin. These type of asset management products, we should be able to trade with the traditional firms who wants to give, let's say, Bitcoin as collateral. They want to buy fixed income. So we want to go down that journey as well. We couldn't do here because the virtual asset is purely virtual asset regulation. Exactly. So for us, we want to go to another hub which allows us to also do traditional assets, extension of the extension. So we felt Abu Dhabi is a good place to be doing that as well. And then we went and approached the regulator, very, very again forthcoming regulator. They understood exactly what we want to do. They were well versed in the topic. I mean, they're probably. I mean, when we approached him in probably 23, they already had 5 years of learning. Because I remember 2018, they approached us so they were well ahead of the curve, right? And when we approached them, immediately they said, obviously, yeah, absolutely, we understand what you want to do, and you need to be here. This is the capital of capital. So, obviously, so we said, we are going to be there.
It's a very good preparation about Abu Dhabi Finance Week.
Yes, you're very strong.
Anton, this is the best promo.
Yes, I agree. Yeah. Awesome. And maybe because you touched upon something very interesting, and this is tokenization. Yeah. And I've been following things very closely in the news, that you're actually one of the pioneers in terms of tokenization of funds, right?
Yeah.
So today, you come from a hedge fund background, myself originally as well. I know this subscription redemption periods, how it works, payment agents. I mean, this is a maze that only when you do it, you realize how complicated it is. And now we're talking about tokenizing funds. So both enabling people to get in and out a lot easier, but also potentially with smaller sizes, right? So can you tell us a little bit more kind of what's your vision for tokenization, maybe tokenization of funds, kind of what are you doing there? And maybe also your thoughts, where is tokenization going? And is UAE one of the hubs where this will kind of flourish? Because we've been talking about, back then it was called security tokens, but today it's called RWAs. Kind of where are we going there and how far we will come?
I think tokenization is such a critical component of digital assets, I think without which we can't go any further. Nice. The reason I say tokenization brings composability to crypto ecosystem, because what sometimes crypto lacks is good collaterals, right? For instance, if you want to trade in exchange today, you can put Bitcoin, but they're all kind of convexity is the same, right? If market goes down, so if you can put treasury as a treasury, tokenized treasury, or tokenized equity as a collateral. So what I'm saying, tokenizes bridges the gap between, I would say, both this traditional finance and DeFi or decentralized finance, right? Because the analog world, the digital world. So for sure, the early stage of tokenizing, many people tried real estate. They thought that was a project to unlock, but really it's a very complex one. Eventually it'll get there, but it's very complex because you have title deeds. The title deeds need to be on chain. It's very, very complex. So hence why the first phase of tokenizing, which worked relatively well after many iterations, is money markets. Yes. The reason money market works is a lot of even digital, and if you really look at it, even the investors of those money market funds are not from the traditional world, because they don't need to go to tokenized world. It's actually from digital world. Exactly. All the digital treasury companies, to diversify away from their own tokens, they would go to some of these tokenized funds, right? Money market funds. So the real the users of that was from the digital universe. because they don't want to go into analog or the kind of fiat universe, and then getting in and out of money was a challenge and all that. They want to remain in the digital domain, provided they can use those collaterals somewhere in exchange, or that's actually, they can finance those collaterals. So for us, looking at it, for sure, tokenization is one of our major projects, and we started that project actually 3 years ago as well, with another large partner, and we said, okay, let's go and build a token. There are many. Tokenization platform itself is a commodity. It's just, I don't think you're going to. There's going to be quite a few of them, many options available, but it's just building a platform, both regulatory compliant and something you focus on few products where you think there is going to be huge adoption.
Yes.
Right. And so when we looked at it on the tokenization, we figured it out. The areas, of course, equity, fixed income, everything is going to get tokenized. It's coming through. It is it is rapidly coming through as well, because some of the decentralized exchanges are already starting in list. Right. But we found where there is a huge demand to tokenize, both on the supply side as well as the demand side, is as funds, as you said, right? Yeah. Because of the complexity of redemption, lack of transparency, then so many. We worked out one stage when we ran through the entire tokenization project. If you were trying to do a fund tokenization, there's some like 30 steps there. Yeah. Setting up a fund and then going through the whole process, So you could, you collapse that into 4 or 5 steps through the smart contracts. Right. And, so tokenizing a fund was, for us, very attractive because many funds exist. Retail as well as qualified investors want to access some of these funds. They can't access in a fractional format, whether it's, let's say, Hamilton Lane's, we tokenize Hamilton Lane's private credit fund, and then, we did BlackRock's money market, then Braven Howard's mastermind. These type of funds, you cannot access that easily, right? And so for us, the funds want a new set of investors. They want liquidity as well. Of course, this gives you, secondary liquidity. And then on the demand side, you had a lot of investors are looking to get access to it. Now, of course, we are very early stages, right? Yes. Because until you build a very good secondary market, that is also difficult. You can tokenize, you can find the investor, you can place it. Yeah. But then you need to find good secondary venue. You can trade these things. Then you need to find also financing facilities, because people will buy this. Then they say, okay, I want to borrow against it. Yeah. Who's going to give me that? So these legs need to develop. Mm-hmm. So today, tokenizer platforms exist. Infrastructure is coming. You know how to tokenize, very well understood. We've tokenized one of our funds as well. All the investor base has been from the digital asset universe. But we need to diversify into the kind of traditional universes. Why would traditional player will buy in tokenized format? Again, for same. Their cost is probably 60-70% less. Mm-hmm. Transparency it gives you, settlement, many other benefits it brings. So gradually they need to kind of understand that and come into that journey.
Mm-hmm. Okay. Yeah. Maybe from my side, I would like to ask you about all of these GVs you guys are doing. How do they work? So you were setting up this custodian. Yeah. And you were 3 partners. Yeah. How do you guys come together? Do you have a percentage each? Yes. Is it an exit period for everyone? Should the company then in the end belong to the bank? I mean, how do these GVs come across?
Yeah, it's an evolving topic. A very good question in that sense, because for us, the reason we went down the path of JVs, like for instance, talking about custody, and then also we've done similar thing in tokenization. We felt we have certain skill sets, right? We come with certain skill set also as a regulated financial institution. We come with skill set. For a number of years, we've been regulated. We understand the regulatory setting. We understand the risk management. We understand governance, kind of, I would say, transparency aspect. But we don't understand all the issues in the ecosystem. The only way to kind of do that is you bring players who going through the pain points. Mm-hmm. So us, when we started the first JV, we felt, okay, bring an asset manager who desperately needs a regulated custodian, right? Mm-hmm. And they bring a cryptographer who has spent good 8-10 years on cryptography and security and all that. Because we can hire and do this, but you will never solve for the industry problems, right? So for us, to do that, we felt We were very early stage. Now, if you were to do that right now, probably you may decide, okay, do it internally. Some banks are looking at it. They feel that, some large custody banks are saying, we don't want to do with JV. This is our core business. We will do internally. Fortunately, we are not, Nomura is actually a broker-dealer. They're not a custodian or they're not a bank. For them, they felt, when we presented the idea, we felt that, okay, get best of the skill set, pain points in the ecosystem, partners who have real vested interest. Let's collectively come together and build it. Equity we equally divide based on each one's inputs.
Okay.
And then we obviously, in that case, Nomura, we were a significant stakeholder. We felt that we are bringing a lot to the equation. And then from there, we kind of went along and, as we went along, we did further fundraise, the other investors came into it, other partners came into it. And then ultimately, to your point, one has to decide who benefits the most, and they may decide to buy the whole thing, or external investor may buy a whole thing. So from an institution's perspective, what it does is it gave us a very clear insight, because I've been in the board from the inception. I clearly understood all the pain points, day to day, week to week difficulty, both selling the product and then, the product issues, the market faces. So a lot of insight came into it, which is very difficult if you're doing it on your own.
Yes.
Unless you're coming with full, knowledge running a heavy crypto business, which we didn't come from.
Yes. Jez, maybe to ask you, when you are creating such JVs and you're bringing partners together, how important is actually the values that you have as a team when you're bringing these things together?
Extremely.
Now you have, a very international background, so I'm sure you know it. But maybe for people who are watching this podcast and they have ideas about JVs, what would you advise them? How to put these people together?
How to filter these people?
How to filter?
It's not easy at all, because any JVs you're going to have challenges as well, right? Because people have different, exactly to your point, different views. Fortunately, but the kind of number of JVs we've done with friendly partners. So people we've knew in the past, friends. Some of them.
What does the time period mean? Like, you know them for 3 years, for 5 years?
30 years?
No, unfortunately, it's not that long. Not that long. Anywhere from, I would say, 2 to 5 years. Okay. And some of them, of course, more recent JV partner I've known for 15, 20 years, right? We come from similar background. But others, we typically tends to be. And then also, you look at, obviously, these people's background, and, we've kind of had a lot of engagement prior, their objectives. Does it align with our objective? Why are they coming to us? Because obviously they need something. They feel that something we have benefits them. Because if you're just going as an equity partner, just putting the cash, it doesn't work.
No, it doesn't.
Right? It will fail, because one is going to complain saying that you just put the money, or you're riding the wave, as opposed to others. So we all kind of contributed fairly, equally with their own. But then others had a lot more vested other businesses. So for us, it was a major project. We kind of held on. We spent a lot of time and effort to build it. So for us, all the JVs have been friendly partners, people who have similar alignments. They also believe institutionalization is a key part of their own success and the success of the industry.
Yes.
If you didn't believe, it's also difficult. Because we are always going to be slightly slower than the others, right? Because we have to jump many, hurdles relative to other kind of unregulated players or people who come from a very founder-led entity. Because any decision I make, I have to pass through the board, and I have to take to the group risk holders. So it has many loops I have to go through.
And when you present your plans to the board, is it a 1-year plan? Is it a 3-year plan? Is it a 5-year plan? How does it work? Because starting this custodian, you're not sure if you will be having a product by the end of the year. I mean, a safe product, because people are going to be holding their cryptos with you guys. So it has to be safe. It has to be transparent. It has to be audited. It has to be cybersecurity compliant.
So the advantage we have on that sense is our obviously entity as well as an institution typically take a very long-term view.
That's very good.
It cannot be a short-term view, because if you're taking a short-term view, very difficult to navigate. Because to your point, we need to do everything kind of fairly compliant and follow similar sort of governance and risk standards and security standards. It takes time because I can only move as fast as they allow me to move, right?
Yes.
So therefore, I can't come up with such hard time. Of course, all these are commercial entities. One thing we didn't do it like some of the other financial institutions today doing. They're doing a lot of work, but it is almost, I would say, internal projects.
Okay.
Right? So they, like a large financial institution, they have to do this because some stage there is a disruption may come through. So they are all cost centers.
Yeah.
They're like digital asset project. For us, from the day one, it was a commercial project. Now, of course, the viability and profitability, it may take time, but it is a commercial project. We did it for not just for the kind of solve a problem, because it's also commercially oriented. It is.
Yeah. Just also to ask you, when I'm reflecting on your background, I see you worked at really, really big organizations, but also you are a founder.
Yeah.
So if you reflect on your life, on your personality, would you say you're more of a founder person who is driving, building? Are you more a person who is more comfortable or more dynamic in a big organization? And what would you advise to young people, like what is the future bringing? Is it more being a founder, a dynamic person, a corporate person?
Yeah, I mean, I spent, good 30 years in corporate entities and, mostly corporate businesses.
Yeah.
Now, the last, I would say 3 years, still part of obviously a large organization, corporate entity, although this entity itself is led by us and built by us for the bigger, obviously our bigger stakeholder. I find the modern, the younger youth, including my children, I advise them, you got to take risk earlier on.
Yeah.
And what the technology and evolution of whether it's AI, digital asset, what it told you. I mean, if you go to some of these conferences, most of the founders tend to be in their 20s.
Yes.
Right?
Yes.
It's actually, eye-opening for me. If I was to go back 30 years, I would have gone down that path. Really, because of course it is a very risky path relative to the path we took, which was risk-averse path, joining a big organization, corporates, and all that. You learn good habits from good corporations, right? So there's no question. But at a certain point, if you're a risk taker, you need to go out there and venture out, try your own thing, or join friends and join partners, try new businesses, and go down that path. So although I haven't practiced most of my life, but I think I'm enjoying a lot more the last few years. I think the path I would advise any young is try that out. I mean, there's a lot of opportunities if you focus. If you fail, you always have an opportunity to go and join a corporate, because the experience you've got from startups and trying out far, far greater than you will ever get in a corporate. It'll take you 10 years to get what you get here in probably a couple of years.
Yes. And early in your career, it was a corporate trading interest rates, as you say, interest rates. Right? And now you're in founder in the most volatile industry in the world. So was it a smooth transition
I mean,
you?
for me personally, it's been relatively smooth because I've spent so many years. I was getting bored of the asset class I was trading because it's very range bound. Of course, the relative valuations are fixed. Quite a lot of it you're trading mean reversion, whether it's you're taking a fixed income, you're taking FX. There's relative valuation, but they're all kind of bounded for years. And then you have, when you come into this asset class, almost price discoveries, takes time. There's no, what is the fair value for Bitcoin? This is a good question, right? Many people come with different value. That makes it exciting. Of course, you have to do your own work. You have to be tight on certain things, but actually a lot more exciting. It's because it's an asset class. Till we are finding out many things, the potential and all that. That is a lot more exciting, which means obviously, historical trading, I would say, strategies and all that not necessarily works directly. When I first came, I thought a lot of strategies I built for many years, they are easily transportable. I came with so much confidence that saying that all these quantitative strategies, I can just put it, whether it's seasonalities, whether many things I've developed over the last 25 years. Believe me, it proved me wrong.
So you're talking to the people, this will generate alpha.
We will be so profitable.
Because the behavior is very different, because it's heavily retail driven. It's not an institutional driven. Institutional driven is the patterns, right? There is month-end buying, or whether it's a pension fund buy. There is very programmatic way the institutions work, which is not the case when it comes to retail.
Just maybe to ask you, one of the biggest success stories in the crypto industry so far were stablecoins, right?
Yeah.
And also what's very positive is that we have very strong initiatives here in the country with the AED stablecoin. Now you're one of the key organizations with Laser here in the country, but also globally. How do you see these developments on the stablecoin side? And also in particular, how do you see the positioning and the opportunity for an AED dirham stablecoin? Like, how do you see this evolving?
Yeah, I mean, for sure, today the most successful stablecoin is dollar. Still, many others have tried. You have EU and all that, Euro. It's not really there. Most of the volume takes place in dollar. Even dollar, one stablecoin operator dominates that space because of, I would say, because of the fact that it's liberated itself and it's across continent, it's heavily used, right? You cannot build a stable coin just for a small region, a small effort, which is what today a lot of the banks are looking at, internal stable coin. Adoption for me, it will be harder. Entire crypto market. Of course, their client base will go into it. People use that as an on-off ramp and all that. But to use as a heavily used stable coin, today a lot of also firms are looking at stable coins, institutions, most for trade finance purpose. They're not using other, obvious payment, trade finance. So that use case is very different to usage in the digital asset ecosystem. I would, for the dollar, the closest to dollar will be something like AED because it's pegged. Right. The advantage of his AED price, you don't need to go through New York Fed wire and wait till the New York opens, right? For settlement and all that, right? There's still inefficiencies in that process, right? Minting, burning. You have to wait for the US time. Somebody needs immediate settlement. Let's say you get a big dollar payment comes in. He wants to actually mint and give you stable coins against it. You cannot do unless you're owning a lot of it, right? You had to wait till the Fed and Fed wires and New York, and it is so. Whereas if you have a local stable coin, huge because this is a huge trade hub, right? UAE, whether it's Africa to China, whether South Asia to Europe, it's a massive trade hub. So there's a lot of dealing happens in AED, right? And or dollar. So AED will. For sure will be a big beneficiary having a stable coin.
Okay. And how does your organization contribute to that or plan to contribute to that? Will you be offering like a on-ramp, off-ramp to your institutional clients? Like how do you see it?
So today in dollar we offer on-off-ramp to institutions and qualified investors. We are quite heavily vested here and we have global banks supporting us as well. For sure, when the AED comes, we want to be a go-to house as well. So we'll be working very closely with the AED stablecoin operators. And stablecoin is very dear to us because it's the first layer of the RWA, right? I mean, that's the first. If you don't have a solid stable coin, which you have, this ability to mint, burn, and kind of on-off ramp easily, very difficult to see adoption. So first, more than kind of creating stablecoin, we need to make sure the banking rails are in place. I think the government here as a whole, everyone's working towards having good, easy rail for on-off ramp, and I think with that, bringing a stablecoin on top of that, AED will be very successful. I feel.
Awesome.
You mentioned in your previous talks that you wanted to start from institutional. Are there any plans for retail?
No, so we'll still keep away from retail. We will of course provide liquidity to retail aggregators, retail firms. But for us, at this stage, we are not. In the future, you never know. Institutions are slow to come by. When we first started, we felt that a lot of traditional finance entities are going to come, and we will be the bridge, right? What we noticed as well is when we built it, they are taking a lot longer than we thought. Our appeal was to provide institutional service to crypto institutions. Because, over the last 2-3 years, unicorns were born every month in the digital asset ecosystem. I didn't need to wait for TradFi entities to come through, right? These entities wanted to do business with the credible, trusted entities like us, and we also want to provide liquidity and services to them. So that's why I saw the opportunity. For sure, retail is the biggest player. So, of course, one way or the other, we have to have interaction. Our interaction, we provide liquidity to people who provide those services.
Awesome. We were praising a lot the country and the amazing ecosystem, but maybe also from your perspective as one leader of a key organization, do you see any part in the digital asset industry that is missing, that needs to be built up or needs to grow further here? Kind of, or maybe to position it differently, is there a big opportunity where we have a gap and that needs to be closed from your perspective?
Yeah, I think the biggest opportunity is, which I also raised with some of the regulators here as well, is around having good banking rails.
Okay.
For sure, that's something, it's coming through. For sure, it's coming through. But that's one thing is, because the amount of transaction taking place, the amount of liquidity here, having very good banking rails is critical.
Yes.
Because without this, you don't see the adoption going further, right? People have still, some of the largest exchanges, you don't have basically fiat rails, right? On-off ramp rails. So it is still a problem, bottleneck in the system. Yeah. And then to your point, stablecoin is extremely, because that actually diversifies away from dollar and gives people other alternative, particularly people who are operating in Asia, Africa, the time zone wise, having an AED type of stablecoin will be big. And then, of course, they are already working on clarity on RWA and allowing securities, tokens, equities, and exchanges coming through local exchanges as well, right? Securities exchanges or RWA exchanges, that will be critical. But can you imagine having an exchange here where you can trade all global stocks and bonds all on tokenized format? Immediate settlement, payment, 24/7.
That's a very good idea for a retail broker.
Yes, absolutely.
Yeah. Maybe we should talk, Anton, about the elephant in the room, AI.
Absolutely.
Yeah.
And how much Jez organization is using it.
Yeah.
And how much him personally is using it.
Yeah, I mean, for me, I come from a very heavy AI background. I mean, I spent my early study years in AI way before obviously deep minds of the world came into it. Mid-90s, I did my academic studies in AI. So I came with a heavy background. So I try to use a lot of AI-driven strategies in our trading, in traditional world. Yeah. That's one of the things I spent in my previous macro fund, hedge fund, as well as also my role prior to this in Nomura's digital officer. Heavy bias was towards creating AI-driven market makers, AI-driven systematic trading, electronic trading. So obviously, we were still ahead of the curve a bit because AI evolution has just gone crazy since obviously very recent, obviously Gen AI, all these things have come, the modeling and the efficiency have gone. So as an entity, we today use some AI techniques for our trading strategies.
Do you have your proprietary
AI
engines?
Yeah, so we have built some of our strategy. We are testing, is it because obviously I think digital asset probably, I would say AI has a lot to probably contribute, particularly some of the behaviors in the market. There's a lot of data sets available, and all the data, unlike in traditional world, all the data set is public here.
Yes.
That makes a big difference. Where traditional world, your own data is not public, right? If you're a large financial institution, it's all your own data. You don't publicize, you keep to yourself. So your AI engine only kind of feeds your own private data, including here. There's a lot of data available, right? So I would say digital asset will benefit significantly. We are also kind of evolving in our AI journey. Try our use. I think that came to the realization, I would say probably a year and a half ago. I felt that it was very important to also kind of overlap with some of the benefits of AI, bring into it and kind of use it. I think our instances will be mostly for trading. Liquidity provision we will be using, and we are kind of starting to evolve into the AI techniques. And then of course we need to use on the back end as well, right? There are a lot of other services AI brings, whether it's onboarding, whether it's settlement, clearing, all that elements as well. You're going to have AI could do a lot better. But day to day, we all use, right, these days, because whether it's,
So would you recommend this something to young people to get involved, or for instance, to your children? Do you advise them to go and learn AI as a technology, as an infrastructure? Because the world has changed quite a bit since we have all started, right? Today, maybe a lot of the teaching material, the teaching methods are maybe less suited for the future that's changing rapidly. So what advice would you give that to young people?
Yeah, no, I completely agree. The education hasn't evolved, right, for the last 30 years. Yes. Whereas the technology and everything has evolved. There are a lot of things available in the open source, even like coding. Historically, you need to be best of the coders. Today, actually, AI can give you like 80% of the quality of some of the best coders there without knowing anything, right? So your skill set needs to be these days how to use some of these techniques. And then also where I would say the human intelligence overlaps AI. AI, some areas of AI, basically you need to have ethics and then of course principles, rules. Because AI works very well if you have the deep expertise and then of course you kind of overlap with AI, right? Yes. So more and more, I think people need to focus on having deep expertise in very niche areas rather than being generalists, because that will give them heavy, kind of application using AI. So my view is younger generation, there's a lot of open source technology. There's a lot of open source, basically, models you can use. You can test it yourself. I mean, today even ChatGPT, you can build models, right? Yes. It's not like a Grok or... So there's a lot of... So everyone needs to start using it. You don't need to be a coding expert. You don't need to be AI expert. Today, a lot of the work is done for you. Yes. But a lot of your day-to-day application, you can use these things. Yes. That's the first way to start, actually. Yeah. Whether it's your school projects or whether it's kind of your own startup project, you should be using these applications, right? Yeah. So my view is, I mean, for sure, AI is here to stay. We are probably, still relatively early in the applications, and then how to use these tools you need to know. Yes. Yeah. More than understand the kind of nitty-gritty. When we learn all the techniques, right, mathematical techniques and all that. These days you need to use there's like 20 applications. How do you use them to actually drive your own needs, basically?
I think
that's the harder bit.
I think it used to be, do you know Java, C or C++? Absolutely. And then it evolved. Are you cool enough to know Python?
That's right.
And now they say, have you tried the new Gemini? Yes. Or the new ChatGPT and ChatGPT 5.1, I think. And have you tried to do your own app and your own program? So there is a lot of this hard work already done. For the young generation. Yes. And they can now be builders. And slowly, I think they will be evolving just on project management.
Agree. Yeah, I think, I mean, I'm in agreement.
Yes, awesome. Maybe also then to ask Jez a little bit, Demetrios, what do you think about your plans for Abu Dhabi Finance Week or for any other event? Yeah. How do you plan to finish off the year? And also maybe, I know you have a very, very strong reputation and name in the region and globally. If people want to connect with you, is Abu Dhabi Finance Week the right place? Kind of, what do you plan to attend or be a part of, let's say, until
all the typically the major events in the UAE, we participate heavily. Yes. Like obviously, when it comes to token, we run our own event, as well as most of my colleagues and they participate in many events, as well as we attend a lot of things, and a lot of the time we are available. I mean, I make myself available those weeks to people visiting. As a lot of people are visiting, they would want to also touch base, including I want to touch base. Some of these people, very difficult to connect with them elsewhere in the world, right? Unless you make specific trip to US, elsewhere, and all that. Yeah. So I kind of use opportunity to connect up with few good people who I want to connect up. Similarly, I'm pretty available. Anybody who want to connect up during that period. So Abu Dhabi Finance, we'll spend a lot of time in Abu Dhabi. We've got vested interest there, and we work with a lot of local operators there.
Will you be speaking as well?
I am speaking at some events. I'm not sure. I'm speaking at more BTC MENA, not FW. But I think some of one of our major projects also having a launch there, and there'll be some announcement on the tokenization side. But there's a lot of players will be there. It's a good place to meet up, discuss, and understand the next phase of the market, particularly after we went through a difficult 6 to 8 weeks. Also, it gives you an opportunity to meet some of these founders, some of these vested partners, to understand their own understanding. Sometimes it's very difficult to get that through a public note or on a private conversation. You get to know a lot. So for me also, that's important, understanding how do they feel about the market? Like the conversation we had after this correction, how they're feeling it, what their appetite to build, invest, go ahead, and how they see the next 6 to 12 months as well, where I'm very constructive, but just to understand and cross-check my own thesis with them.
Awesome.
Maybe before we close, because this conversation is going amazing.
Yeah.
Maybe we can talk a little bit about decentralized finance.
Yeah.
Are you guys looking at that?
Yes. For us, I would say DeFi is extremely important to unlock on-chain finance. We are only, one of the main reasons we came into this digital asset is really go into on-chain finance. The Laser as a whole, a lot of our capital, we are literally building capital market infrastructure on-chain finance. What do we mean on-chain? Is ultimately DeFi, whether it's DEXs, whether it's on-chain asset management, you have vaults and curation of vaults and managing, because your first wave of assets are going to come in kind, right?
Yep.
Yes.
New money coming in, you're not in control of it, right? Because it's in control of the trustees and when TradFi decide. But your first, your port of call is people who already long Bitcoin, people who already holding assets, helping them to manage. So that becomes on-chain business. Yes. So, right, a lot of them want to have it in a vault. They can see it's transparency. They don't want to kind of, turn it into a fund, kind of not transparent. So for us, DeFi is a key component. So we spent the last 2 years building the technology internally. But then
we didn't know this.
Yeah,
yes,
so we've been heavily focused on that. Both kind of looking at arbitrage opportunities and
Can I ask if it's a GV or not?
No, it's not JV. It's, because that one we decided to do it because we had to learn a lot, right? And it's also small steps, and also our steps are going to always be smaller than some of the natives or unregulated players, because it is where the regulatory side becomes challenging because of KYC AML side of it.
Yes.
So for us to unlock that, while I brought few DeFi traders, DeFi technologies, first year was very frustrating for them because every step they went through, whether it's going to my compliance, group compliance, it was a challenge to convey how we are going to do the pool monitoring, how do you avoid, kind of red flag actors coming into your pool, you're getting involved. So that aspect we had to fix. It took us good 2 years to look at who are the vendors, because our technology is evolving as well, right?
Yes.
Today you have decent vendors who can give you those technologies, do the pool monitoring, pre and post trade, basically pool monitoring. If there's a certain threshold beyond which you come out of the pool, if you think the pool it looks like even 0.1% tainted and all that.
It sounds like the surveillance system of Nasdaq.
Yeah, agree. So very similar sort of surveillance system we had to build. So there are companies who come in through. With that also we manage to convince the internal stakeholders there is technology now there. We have the ability to monitor. Therefore, fortunately during that period we've built the technology. So we are just as we speak going live with the strategies.
Oh, very nice.
Yeah.
And one of the amazing features of decentralized finance is transparency.
Yes.
And now when you compare that to investment banking and hedge funds, where everything is very, very secretive, how do you merge these two?
Yeah, it's a tricky one because transparency is very good up until a certain point as well. The reason why I say that is in the current market, this is a good debate I have internally. It's not like I'm not in the camp yet, but I think transparency is very good. So I'm a big believer of like exchanges like Hyperliquid, what they have brought to the ecosystem. Many of some of my colleagues, this is the obviously the house of finance they call it. The way they're going about transparency, they brought about how they've went about setting up the exchange, and also liquidity, how it's gone to exchanges like that. Even the recent crisis, how they handled it and all that. Of course, centralized exchanges, some of them have done well over the years and all that. But I think the transparency has a lot of benefit, but also it has some issues because when the market is doing well, transparency is fine.
Yes.
When the market is under a little bit of, I would say, under stress, when the liquidity is limited, people's risk capital is limited. When you start seeing too much of transfer, one large player can really move the market, right? Which while I would say in a traditional world, still the market may move, but it is giving transparency in a way. A big stakeholder today can show their position and they go into exchange and actually put a tenth of the position. Market thinks, okay, another 10 times position coming. It's sometimes, I don't know whether it's good or bad. In my sense, the recent volatility, the too much transparency has created a little bit of void in liquidity. So somewhere in between is the balance. But while I understand many libertarians, why the entire decentralized finance, why the entire crypto game is to give that transparency. So that debate will have to go, because there's a reason why people create dark pools and all that type of thing, right? So market has to evolve to get to some sort of hybrid point. Today, while transparency is good, also it creates issues. Now, transparency is not good, particularly when there is. It's not good if large players can use their stakes to move the market, showing their hand. Like for instance, in FX market, you will never see what a large bank is going short, or another large bank is in a certain thing, because it's heavily retail driven market. Means when you see a large holder, everybody follows. Then what happens? The liquidity just completely dries on the other side. You don't have a balancing mechanism. So that's the issue with a lot of transparency. While people advocate for transparency, is because a lot of the players in the digital asset ecosystem are also unregulated. So therefore, are they doing everything right? That's the question people ask us. Okay, we want transparency. So I can see the kind of the debate going one way or the other. But eventually, institutions are going to come. Certain institutions will play in, I would say, in the centralized type of world. The other institutions will evolve in it. I mean, today it's happening already, right? The liquidity is a bit fragmented, but liquidity at times goes heavily into decentralized world. At times it kind of goes the other way a bit. So,
but the problem is, if you're trading decentralized, and we had this big debate with Anton last week, and you do something wrong, and you want to get the money back from the LP, you do not know who is the LP, and you do not know who to contact in the DEX, and nobody will answer, because most of these DEXs do not even have support.
So these are the elements we need to rectify, for sure. Very good point. That is actually issues when things go wrong, and who takes the ownership, who actually solves that issues. I think the technology is coming to a level you will know all the LPs participating if you're using pool monitoring and all that. Now, does it mean that legally you can go back? That's a separate issue, isn't it?
Can we reverse the transaction or cancel it?
Agreed. So some of it is, I think it needs to evolve, right? Who's the ultimate, basically, entity or person you can go after? If there is issues in the ecosystem, that has to evolve. So, is there, I would say, governance? I would say decentralized governance, system which protects it. Market needs to evolve. This is, the recent liquidity, I would say, issues in the market over the last 6 to 8 weeks has exposed that, right? And some of the,
we have seen orders slip by 85%.
So,
and we have seen crazy things happen. And then again, you do not know how to complain. You do not know how to talk to the LP. You do not know how to get in touch with the DEX. And even if you knew who is governing this process, who will make sure that a fair resolution will occur, because you might be wrong as well. But there is definitely things to be evolved. I think technology and compliance should also talk closer to each other.
I tend to agree. A lot of the things, those are the kind of real issues we are solving to participate more in the decentralized ecosystem. But they are very similar issues. A lot of, I would say, institutional players, when they come into their face.
Awesome. Jez, I want to say we had a really, really great conversation. I also feel we could go on like this for many more hours.
I think a masterclass.
And I will take it, Jez, at one point you said it, I'll take it as a big compliment that what we discussed today is some of the discussions that you have internally as well with Laser Digital.
Yes, absolutely.
Which I'll take it very positively. Really hit
very
the
relevant.
Crux. We cracked the heart.
For sure.
Yeah.
You both touched upon the real
and you were
issues we are facing.
A pleasure to talk to.
So likewise. Good to speak to players heavily vested in the industry for many years.
And thank you for coming to our podcast. An absolute pleasure, and an absolute pleasure to meet you also in person. Me and Anton, we've done some preparation, of course, to make sure that to ask all the right questions. But you shed some light into some very strong things we wanted to discuss.
Likewise, thanks very much for inviting me. It's been a pleasure being here, talking to you.
Yeah. Thanks a lot, Jez.
Thank you.
Thank you.
And I hope you enjoyed the show. Have a blast. Subscribe to the channel and enjoy.